Well, one of the most significant stories of 2025 quietly slipped by this past week. And predictably, Western media barely bothered to mention it. You'd think an event that could reshape global financial markets might get more than a shrug, but here we are. The BRICS bloc has officially rolled out a brand new payment system, opening the door for 185 countries to trade in Chinese currency and bypass the US dollar entirely. For years, I've been tracking the rise of BRICS, and the momentum behind this group is nothing short of staggering, especially the sheer number of nations lining up to join them, from Africa to Latin America, from the Middle East to Southeast Asia. Most of the world is now leaning toward BRICS and looking for the exit sign from a dollar-dominated system that comes packaged with US sanctions and the usual political arm twisting. And no, that's not just my opinion. Major Western outlets, yes, even Bloomberg, have published projections showing BRICS Plus on track to eclipse the G7 in global GDP. By 2050, the G7 is expected to hold just 18% of the world's GDP, while BRICS controls nearly half. Those numbers are stunning, and it's no wonder Bloomberg is suddenly ringing alarm bells and admitting that BRICS is becoming impossible to ignore. You can practically feel the panic when a G7 member like France starts floating the idea of inviting China's Xi Jinping to next year's summit in France. Let's be honest, there's almost no chance he'll bother showing up. Why would he? China is driving the BRICS expansion, and the Chinese currency has exploded in global popularity, with more countries taking on RMB-based loans than at any point in history. And that's what makes this shift so remarkable. For years, we were told the renminbi could never go global because it wasn't fully convertible like the US dollar. For years, financial experts insisted the dollar would reign forever, thanks to its reserve currency status. But when you actually look at the numbers, it's incredible how quickly China is closing the gap. Over the past 5 years, Chinese banks have quadrupled their overseas RMB loans, deposits, and bond holdings, now totaling the equivalent of $480 billion. That surge shows just how rapidly China is embedding its currency into global finance. Just last month, the Bank for International Settlements reported that overseas RMB lending to developing economies jumped by $373 billion in only 4 years. This is exactly why China's position within BRICS matters so much. Developing nations aren't just turning to China, they're turning to China's money. In the last 2 months alone, several African nations, including Kenya, Angola, and Ethiopia, have shifted their loans from US dollars to Chinese RMB. Indonesia and Slovenia have announced plans to issue RMB-denominated bonds, and Kazakhstan's development bank recently sold a 2 billion RMB offshore bond at just 3.3% interest. And yet, none of this makes the front page of Western media. Why? Because these developments are happening in the global South, far outside Washington's sphere of influence. And acknowledging them would mean admitting that the world is moving on. Step outside the Western media bubble for even a moment, and you'll see a completely different reality. Most of the global South, especially across Africa, is eager, sometimes even enthusiastic, to work with China. Earlier this summer, right in the middle of Donald Trump's global tariff war, China made a move absolutely nobody anticipated. Beijing signed a zero tariff trade agreement with 53 African nations. This wasn't just big, it was unprecedented. We've never seen a rising superpower orchestrate a unified economic strategy with an entire continent, let alone one designed to reshape global governance itself. But that's where things get interesting, because it's not only developing African nations signing new deals with China. Remember last month when Donald Trump flew to Malaysia, Japan, and South Korea to meet regional leaders? Washington tried to frame the trip as a powerful display of American influence, and the White House immediately declared the visit a major success. But here's the part you probably didn't hear. Less than 24 hours after Trump left Southeast Asia, the region collectively upgraded its free trade pact with China. That matters because ASEAN, the Association of Southeast Asian Nations, is actually China's number one trading partner. Last year, the 11-nation economic bloc conducted more than $771 billion in trade with China. Singapore's Prime Minister Lawrence Wong put it plainly when discussing the upgraded deal. It will reduce trade barriers, strengthen supply chains, and open new opportunities for growth. Translation? Trump isn't winning the trade war. Countries are gravitating toward whichever partner looks more stable and predictable. And so far, in 2025, that partner is China. 2 days after Trump departed Asia, Indonesia raised $842 million through the first ever sale of Chinese yuan bonds. These dim sum bonds are written in Chinese currency but sold offshore. And here's the remarkable part. Indonesia didn't borrow in US dollars. They chose Chinese renminbi, and global investors flooded in. The Indonesian government offered 6 billion yuan worth of bonds. Investors placed orders for 18 billion, 3 times the amount available. That tells you 2 things. International investors are extremely bullish on Indonesia, and they're perfectly comfortable holding Chinese currency as an investment asset. And that's the big message people need to understand about this global financial shift. A decade ago, nobody wanted RMB denominated bonds. Today, countries are funding infrastructure with Chinese capital, and investors are lining up to buy renminbi debt. Zoom out, and the pattern becomes obvious. China is becoming Asia's financial anchor. Each time a major country issues government debt in RMB instead of US dollars, China's currency moves one step closer to becoming a legitimate global alternative. Just look at this chart from SWIFT. The renminbi share of global trade finance has quadrupled in 3 years, reaching 7.6% in September and making it the second most used currency in trade finance, right behind the US dollar. The trend couldn't be clearer. Chinese renminbi usage is exploding. Back in 2016, cross-border RMB payments were practically non-existent. But over the last 5 years, quarterly transactions on China's CIPS network have surged to nearly 13 trillion yuan every single quarter. China isn't talking about becoming a financial superpower. It's already acting like one, and the rest of the world is adjusting accordingly. CIPS China's cross-border interbank payment system now processes more than 52 trillion yuan a year. That's roughly $12.7 trillion worth of transactions annually. And it accounts for 58% of all of China's cross-border financial flows. Even more remarkable, the network now links 4,800 banks across 185 countries. Just last month, China and South Africa, 2 core BRICS members, launched the first ever BRICS loan denominated entirely in Chinese yuan, marking their first financing project conducted solely in Beijing's currency. The money is headed toward development initiatives across Africa: infrastructure, energy, manufacturing, water management, and education. And honestly, this is why so many nations in the global south are leaning toward China. No country has developed as fast or as efficiently over the last 40 years. Developing nations are looking at China's blueprint and thinking, if they did it, why can't we? But again, it's not just developing economies. Right after Trump's visit to South Korea, the Korean president sat down with China's Xi Jinping and signed a new currency swap deal worth 400 billion yuan, or over $49 billion. The agreement between the Bank of Korea and the People's Bank of China will last 5 years and will once again allow both countries to trade directly in their own currencies, completely bypassing the US dollar. Right now, 1 out of every 13 international trade transactions is settled in Chinese renminbi. And with the new BRICS payment system coming online, that number is only going to rise, meaning fewer and fewer global transactions will be conducted in US dollars. For the Global South, this is a massive win. And the reason I'm giving you this update is simple. Understanding geopolitics helps you understand markets, and that makes you a better investor. Now, let's transition into the investing side of today's video. Earlier this year, I profiled a company called Vizsla Silver. Take a look at how the stock has performed, up nearly 158% year to date. Many of you have messaged me about how well the company has done. Well, the same team behind Vizsla Silver is now going after copper, one of the most critical minerals on the planet. Their new company is Vizsla Copper, trading on Canadian markets under VCU and on U.S. markets under VCUFF. If you're following how geopolitics, de-dollarization, and critical minerals are reshaping the world, this is a story you'll want on your radar. Because right now, every major government is talking about the same three priorities: energy security, supply chain security, and securing critical minerals at home, not from geopolitical rivals. And copper sits at the center of everything. You can't build EVs, charging stations, data centers, or modern power grids without massive amounts of copper. And suddenly, the West is waking up to the fact that relying on foreign suppliers is a serious strategic risk. That's where Vizsla Copper and their latest deal come into play. The company just announced its acquisition of the Palmer Project, a late-stage copper, zinc, silver, gold project in Southeast Alaska. It's an exciting location in a proven mineral belt that already hosts major operations like Greens Creek and Kensington. Here are the key takeaways. First, the resource is already substantial. Combining indicated and inferred categories, Palmer holds around 17 million tons of material with a 3% copper equivalent grade, which is considered high grade in today's mining landscape. Second, the drill results are impressive. Some of the latest drill holes have hit long stretches of massive sulfide, carrying strong copper and zinc grades plus extra silver and gold on top. These are the kinds of results geologists get genuinely excited about. Third, the project is already de-risked. More than $116 million has been invested into the Palmer project so far. Because of that, it already has access roads, key permits, and critical infrastructure in place, ready to scale. In other words, Vizsla Copper isn't starting from zero. They're stepping into an advanced stage asset in a strategic U.S. jurisdiction at a moment when Washington is openly talking about the need to onshore critical minerals. The Palmer Project has even received direct support from the White House. And now the company has announced a non-brokered financing of up to 25 million Canadian dollars. The plan is to use that capital to aggressively explore and expand the resource at Palmer in Alaska, continue drilling their other projects in British Columbia, and cover the acquisition costs and general working capital. Behind all of this is a team with a real track record of winning. Craig Perry, the chairman and CEO of Vizsla Copper, is also a co-founder of Inventa Capital and a founding director of NextGen Energy. I had the chance to speak with Craig directly about this deal, and what he and his team are executing at Palmer is genuinely impressive. I always pay close attention to companies run by CEOs with proven track records. And Craig Perry has one of the strongest resumes in the mining sector over the last 25 years. So if you were one of my subscribers who capitalized on Vizsla Silver earlier this year, you'll definitely want to dig deeper into Vizsla Copper and decide whether it deserves a place in your portfolio today. Of course, always consult your own financial advisor before making any investment decisions. And please do your own research. Invest responsibly, and as always, understand the geopolitics behind the ticker symbol. Thank you all for the continued support, and I look forward to seeing you in the next video.